In this video, we're going to talk about a $1,000 altcoin portfolio. The reason why I wanted to make this is because there are so many 100x videos on YouTube. There are so many influencers talking about altcoins. It is literally a minefield, but there's no place to start. As you might know, I've started my own personal journey in crypto with 3,000 euros in 2017, and I've managed to run that up to 50,000 euros at the end of 2017. From there, I decided to go full time in January 2018 as I thought that we were going to have a longer bull cycle. I thought I knew it all. Little did I know, because that was the actual peak of that bull cycle. The years after, I've lost almost all the funds and had to make sure that my portfolio was actually going to survive, which was quite hard. During 2020 and 2021, my portfolio grew by a significant percentage as the bull market enhanced. But then still, from my personal information and from my personal perspective, during that period, I didn't have any plan entirely written down. So what did I do? I did make split-second emotional decisions on the spot while my portfolio was going to a number I've never seen before. Ended up by making suboptimal decisions, which ultimately ended by having a high level of risk and also losing money. That's the exact reason why I decided to make this video, as I've also started with a small portfolio. I've been to where you were, and I have been growing it over time, making a ton of mistakes. I've been getting through the experience that you're going through as well. So what can I do? I can make a video where I provide you with tools on how to build a portfolio, how to manage it, how to design it, and how to trade it through a bull cycle, which I wanted to have when I started trading the actual bull market. And I'm making content as a sort of journey for myself as well, to reflect and to improve and to share all my experience I wish I had when I started, to avoid my own mistakes. Before we continue, I'm more than happy that we've reached 64,000 subscribers and also 700,000 followers on X. And I'm more than happy to decide that you decide to watch my videos. And I've been receiving a lot of positive comments on the previous video, which we discussed managing a portfolio, building a portfolio, 20,000 views. It keeps me motivated to keep on putting in more hours into the video. So in that regard, I said it last week, I'd like to make an agreement with you. If you subscribe to this YouTube channel, I'll make sure that I continue to increase the content as much as I can. And I can share that we've got some really cool things happening at this point, which is a new production, new content, new studio. It's all going to be there for you. And because I'm saying it, I need to share something with you, which was about the previous video. I've discussed the consultancy in the previous video, and I'm proud to mention that we are currently full. There was such a large interest into the products that we are providing through the consultancy, and as you know, it's a personalized, hands-on, one-on-one assistance for clients that want to be in the bull cycle or in the crypto markets. And it's full. It's just at this point we are having so many requests, which means that we cannot onboard any new clients anymore. We believe that the value that we deliver is not going to be the best as it should be, and therefore we decided to stop it for a few months. And we actually are making sure, or doing our best, that we are providing the highest quality possible rather than having a lot of clients. This means that you can still provide your interest through our website, but you will be put on a waiting list. But also, beginning next week, we are going to actively search for people to strengthen our team who have the same mindset, who want to have an impact into people having a financial stable future, the adoption of crypto and all those things. You can find our vacancies on the website. We will be on the search for consultants. a content manager, a visual designer, a performance marketer, a research analyst, and business development, all going to be on a website. So if you want to be able to have an impact, make sure to screen our website in the upcoming week. In our last video, I've been explaining to you everything you needed to know about building and managing a portfolio. Now, today, it's going to be about taking a step back and building a $1,000 altcoin portfolio, which is a very normal level to start a portfolio. And I think you're looking for coins you should be buying, and we'll be diving into that, but it's not going to be about that. It's going to be about essential key concepts that you need to know, screening the markets, deciding which segments you're going to allocate to, deciding how you should be trading it, the max amount of coins you should be having, how to de-risk, how to get targets going. All those things are going to be discussed in this video, in which we're going through all the steps you need to make sure what you'd like to be building and how you can start with a small portfolio and go on a beautiful journey through this cycle. I'm making this content as I'm sharing my own mistakes, my journey, and my experiences with you to make yourself ready for a financial stable future. Let's get started. Before we are going to continue, the first thing we want to discuss is the craziness of the markets, because the past week we have experienced a new all-time high. The all-time high was reached just at $70,000. Technically speaking, it's a barely any all-time high. It's the first test that we're seeing of the all-time high. It's a very vital test in which, as we've seen the previous all-time high test here, you can also see that we had a slight bump on the road and at least came down a little bit here. To be fair, right now we are seeing the exact same, in which initially we had a first test of the all-time high, in which we took the test here, took liquidity and started to make a U-turn, in which we dropped. And given the fact markets are moving based on very important levels and narratives that change, it wouldn't be strange to suspect that we're going to have some negative information coming from the markets, or some FUD surrounding the Ether ETF, or some FUD surrounding Binance perhaps even. All macroeconomic news having an impact on the markets, which might mean that the markets are going to correct back down. At this point, it feels like we are currently a little bit overextended to the upside. I don't know how far we're going to have a correction. All I know is that the data shows that it's a bit overextended at this point, and it shows that there is a case that there is a potential likelihood of a correction to be happening. At least the chances of it happening have increased, because there is such a high level of sentiment, and there is such a price increase in the actual asset itself, through which, if you look at the landscape, we are still seeing that we are doing the exact same as we have been doing as the previous halvings, in which we reach a peak pre-halving. We are close to 4 to 5 weeks pre-halving. The only difference that we're seeing here is that the ETF has basically triggered an acceleration in influx and an acceleration in the price increase, which might ultimately mean that we're going to copy paste the previous cycles, or at least are going to have that bull cycle that we think we could be having. But at least we have been getting into a higher level at this point, as we are close to the all-time high. It doesn't mean that we don't need to have any correction at all. It seems that there is going to be one, but the question is when and how and if. And based on the fact that we're currently around an all-time high, you need to make sure that there is some concerns of actually stepping into the markets at this point when it comes to Bitcoin. Now, what you can see in the chart itself is also this correction. The moment that there is such a high sentiment in the markets and it starts to change, or it starts to reverse, is going to be a very painful correction through the markets, in which altcoins might drop just 20 to 30% within an hour and come back up afterwards as well. So I suggest that if Bitcoin is going to be peaking at this point, which still seems likely, it's probably going to reverse in a way that it's going to be giving a pretty substantial impact, drop around 10%, altcoins drop around 20%. From there, likelihood of altcoins to continue, but the odds of having Bitcoin close to a peak pre-halving is definitely there. The positive side, the past week we've seen a net inflow of 2.2 billion in the markets, which is the second highest. In week 6 we had another big influx, then it calmed down, now we are seeing another one. The interesting part is that it is approximately 8 times more than the amount of Bitcoin being mined, which means that if at this point we're at 8 billion in net inflow in the markets, if that is going to reach 200 billion, there is a significant chance that Bitcoin is going to have a way larger cycle than we were expecting it to have. As an expectation here, we have seen such a large influx. If this continues to do so, we need to have some big players selling their positions. I don't suspect that the ETFs are going to do that, but at least this is a very positive signal. Not so positive though is the fact that there are some macroeconomic data points which are interesting to keep an eye on. The interesting fact here is that the unemployment rate starts to rally. There are two things that are very important here, and I think that the Fed came to a level, the interest rate is remaining flat. The ECB also decided to keep it at 4.5%. If they're going to stay with that for such a long period of time, it's going to crack the economy, and then you're looking at a potential recession through the data that we're seeing here, and that needs to continue. At this point, the unrest in the entire economy starts to increase because gold starts to rally too, and Bitcoin has a narrative with it. Now, if they start to drop the interest rates, that usually has a negative impact to the markets, but it could mean that the recession is avoided and we have a little bit longer of time. But usually they start to drop the interest rates just because they feel the economy is getting weaker, and then you don't want to see the unemployment rate, which has been rallying towards 3.9%. The total market cap is very comparable to Bitcoin at this point. Massive run. It wouldn't be strange to have at least a correction or a sideways period to just calm down. A period where we just go sideways in terms of total market cap, which means Bitcoin goes down, altcoins have a correction, and from there the altcoins start to rally, which means that also that thesis surrounding the Bitcoin cycle is still remaining the same, but it's usually going to end up in having corrections which are going to be harsh and which people do not expect, especially when the markets have been rallying. Total market cap is doing great. Bitcoin dominance is still doing great. That's going hand in hand, but once you start to look at the monthly, it seems like we are on the edge, whether it is 1 to 2 months more, but we are on the edge of having a reversal downwards, which means that I think we're still close to the actual valuation of Bitcoin to be so far overvalued compared to the rest, which means that the Bitcoin dominance is likely going to drop, and that also means that Bitcoin is close towards a peak. Before we can start discussing how you can build an altcoin portfolio of $1,000, we need to make sure that you're aware of your own behavior. Trust me, I've been doing all of those. I've been making the exact same mistakes. I still make mistakes, but they are calculated because I have been experiencing them all, and I use the information from them to making better decisions at this point. And I'm here to inform you on which ones I've been making and why I've adjusted the behavior. We'll go through them one by one. The first one that I would like to discuss is a very important one, and I've been seeing it all over again. Basically, it means buying 500 altcoins into one portfolio, hoping to have that one big multiplier that is going to generate a high return in your portfolio. Basically, this is fueled through social media, leading to a case where myself or even any other KOL is talking about a project. You think it's interesting to look at, are unaware of the actual valuations, unaware of whether it's actually a great project, and are just adding a slight portion or large portion to the portfolio of the actual altcoin. The result is that the portfolio is super hard to manage, and it leads to ultimately a lower return in your portfolio. And I'll tell you why. The altcoin markets are pretty substantially correlated with each other. So that means that if one moves, the rest usually moves too. There are correlations between groups of coins, but as a whole, altcoins are usually going into a very narrow window of time where they start to perform well and then they don't perform well anymore. Therefore, given the fact that your knowledge is usually not the level of an actual asset manager or at the level of a fund manager, or you're just simply not spending 40 hours per week on this actual market, it means that it's very complex for yourself to manage many coins, because with all those coins, you need to make sure that you're selling them in time, buying them in time, staying aware of the news, knowing which markets are going to do well, etc., etc. You should also need to know that some coins are inversely correlated to each other. So if you have both of them, then technically you're not going up at all, because if one goes up, the other one goes down, and if they swap, your portfolio is just staying equal. So by adding more coins towards your portfolio, you're actually marginally making a loss of the potential return and making it difficult for yourself to also analyze what you're doing. So my recommendation would be have a smaller portfolio with less coins, which are easier to understand. You know all of them what they are doing, and you are easier to actually manage such a portfolio, making sure that you grow, because ultimately having 500 altcoins in your portfolio is technically leading towards gem hunting. It's a short-term efficient way, but you need to have a long-term way of thinking, because if you do that, then you're making sure that you're going to do well with your portfolio, and then you're making sure that you are going to remain calm. The second one is not going into an altcoin with a straight plan. I've discussed this in the intro. I've been having a case where I basically had around 10 to 20,000 euros left. I had a company back in the period that I had a bear market, so I kept on having an income, but my portfolio literally diminished. And then I had the ability to start building a portfolio again. I had like 10 to 20,000 euros left, through which I decided to allocate it towards altcoins that had staking during that period. So I decided to take a position into Matic. I decided to take a position into Veracity. But once I decided to make that decision, I didn't come up with an actual plan, and I should, because all of a sudden Veracity was going 100x and even 200x, but I literally didn't know what they were doing, what the latest news was, what the actual real valuation is, what my value of my portfolio was, and what my potential risk would be by having that portfolio. So I was basically buying at random, throwing money at, well, not entirely at random, because I had a decision of I want to have staked assets, but I wasn't aware of the fact where to sell. I wasn't aware of the fact of the risks that were involved by having it. So every time when you come to the charts and come to the trading part, you have an emotional based decision, because in my case, I was making money that was larger than what I was expecting to see. It was money that I've never seen before, through which that emotional bias is fueling the actual decision making, making sure that it's ending up by making wrong decisions, which ultimately leads towards mistakes. Because if one decision is made fueled by emotions, usually this means that is creating an entire path of emotion-based decisions that are going to be made, resulting into a large amount of losses or painful decisions. So this leads to selling everything at once, or it leads to buying back faster than expected, or it leads to keeping your positions for too long. It's just not having a plan as a result, and that's what we try to create with this video. The third one is that you're taking too much risk with the portfolio by having small gems in your portfolio. Well, as I just discussed, I did that at the beginning. I think it wasn't unfair for myself to do because I had the ability to take a lot of risk, but making sure that I stepped into the markets and I was active in the markets, but at some point the markets were accelerating so fast that I couldn't keep up with all the information that I needed to know. That's also why I sold Matic too early and kept FRA too long. Now, at least most of it. Probably you will be knowing this yourself, is that if you're looking at selling a position, it might run further than you would be thinking at that point, but it doesn't matter. Ultimately, the ROI in your portfolio matters. So if you have a 10 or 20x in your portfolio, then it's great to have, and you should be looking at a potential case of rebalancing your portfolio through which you are de-risking the risk that you take in your portfolio. Also, another one is the fact of not having cash in your portfolio. I get it. If you start, you can do that, but at the point that you get higher in the cycle, you need to have cash at all times. So I think ultimately you want to have a case where you're growing your portfolio, understanding what you're doing, making sure that you've got metrics that you can evaluate your decisions from. Then that point, then straight up gambling and trying to predict the next 100x. It's just not a way of getting into these markets. The fourth one is not selling at all. I think it's the most important one. Aside from deciding where to buy, it's also when to sell. I mean, if you're going into the altcoin markets, I know that 90% of the people, in terms of amount of people, are going to buy in the last 10% of the actual move of the altcoin. So for instance, I think 80 to 90% of the newcomers in 2021 were buying Bitcoin above 50k. So I've been going through this many times. It's also being fueled by, all right, the altcoin is going up like 5 times in a week or in 2 weeks. And the question is this realistic? Is it going to go up even more? My portfolio is going up as much as I can consider. I wouldn't even imagine, just as the example I've seen where I've been having Veracity and just kept a portion, not all the way down, but at least some way down. And in 2017, 2018, I did it with my entire portfolio, which I kept and just rode it all the way down. It means that you need to start selling, and that comes down to having a plan prior to the actual asset. Ultimately, what the asset does shouldn't care to you at all. You should be aware of the fact that there is a ROI to be made. That's when you start to sell and buy back in, independent of the actual asset. The fundamental research is deciding for you which coins you want to have. We'll talk about that in a little bit. But you need to have a strict plan to be actually able to making sure that you're not making any mistakes in this market at all. I'll show you a few examples of cases where not having a plan is actually miserable to know. First one, here is Dogecoin, which basically went up vertically. So it went up in such a way, and I'm trying to find the date range. Here we go. This took place in a matter of 14 weeks, a little bit more than 3 months. If you take the previous run, it is approximately 18 weeks. And from there, it went down by around 60% in 11 weeks as well. So the more vertical you see a chart of an altcoin, the more you should be aware that you should stay away or have a very short time horizon that you're looking for an investment into the altcoin. All right. So at this point, as you can see, most of the altcoins are still relatively undervalued, especially if you're looking at the Bitcoin pair, which means that the time horizon of investment is significantly larger and longer. And the risks are relatively small compared to having such a chart where something just went 10x in 4 to 5 weeks. But still, most people jump in. And then you can also see that now approximately 3 years later, we are still down by approximately 78% of the all-time high. So it is tricky to start entering when something starts to go vertical. That's why it's super important to know that today, or at least right now, is the point that you should be aware of the actual and you should be aware of the potential that there is in the market. So you should be aware of the valuations, which are still relatively low. And this is one of the examples of coins that are never coming back to their all-time high. NEO was one of the biggest coins in 2017. However, approximately 3 years later, it did have a run because Bitcoin had a run, but it didn't even come close to the all-time high, actually 30% shy of the all-time high. And right now the valuation is approximately 91% lower than the actual all-time high, which means that this is one of those coins showing you that if you invest into altcoins, then if the actual massive expansion occurs, which we have seen here too, it is a very short window. So here you can see that the run also took place from $10 to 26 in 3 months. So it's a very tiny window, and after that window, it is likely for a long sideways action before another expansion or no expansion at all. So the more it becomes vertical, the easier it would be to decide to not invest into it. And I wanted to show Matic for you to see that I actually have to put it on log scale. I decided to do it somewhere in October, November of 2020, which was here. The valuation was around 2 cents. So that is great. But then the expansion took place and I started to sell literally in the week of April 2021 around 40 cents. So I did make a 20x. And then it did make this move to $2.60 afterwards. It was a painful one. And you can see that the first push that you see in the bull markets, and I think you should be reflecting to it, which is the all-time high test or close to all-time high test. That is, until then, it's still fine to take the entry into the asset if they are fundamentally strong. The push after, which is essentially anywhere from Bitcoin breaking its all-time high and altcoin starting to run from there. From that point, the risk of investing into an altcoin are significant because when Bitcoin breaks the all-time high, it is also meaning that the valuation of the altcoins are going through the roof and they are getting into territories that they shouldn't be, which means that at some point they are likely coming back to those levels to retest, which means that your window of investing for that altcoin needs to be more narrow or needs to be shorter to be aware of the risks that are involved. And in this case, the same. Bitcoin essentially started to break its all-time high. Then we had this run, but ultimately this period of consolidation gave me another chance to get into the actual asset, which you will be seeing across the field. So the more vertical it will be, the shorter your time horizon of investment, and also you need to start selling, because in this case as well, I did sell. I should be happy. You should too. But if it goes up even more, get out. If it is too good to be true, just get out. The final one is the ultimate mistake of quitting. After the previous bull market and the bull market before that, a lot of people, many people have felt the urge to quit once they have been losing money or making bad mistakes in a row. It's not the most optimal solution, and I will tell you why. Well, ultimately, you're in crypto because you'd like to increase your portfolio or you will be able to secure your financial future. That's ultimately what brought you into the markets and also what brought me into the markets. However, once you decide to get out of it and not taking responsibility for the mistakes you're making, you're stuck into the system again and you will be living that standard life which you don't want to have. You will be vulnerable for inflation. You will be vulnerable for other things. So in that aspect, it is super important to introduce variables that are for you easy to reflect, to manage, to evaluate on every decision that you make, good and the bad, that you're able to decide, hey, this was a good decision based on this and this and this. this was a bad decision based on this and this and this. And from there you can keep on building, which means that, for instance, for me, the personal mistake was from the previous cycle was not actively working on my portfolio. I kept on sitting in positions. I kept on investing into risk-on assets, and those kept going down. So I actually took the profits of altcoin, invested into altcoins, and they were going down because the correlation is there, especially when Bitcoin corrects. So I kept on doing high beta plays, and I kept on sitting into positions that shouldn't be there. So I want you to prevent of making those mistakes. But now, how can you actually start a $1,000 portfolio? Let's face reality. Most people don't have the ability of starting with a large portfolio and are starting with a small one. That is fine. I mean, if you start with $100, $1,000, $10K, $100K, 80% of your portfolio into crypto, 20%, 50%, you're all going through the same journey. You all have different goals. So it's hard for me to provide you with information on that, but there are certain things that are not unique and that can be done or can be helpful for everyone. And you'll need to know your risk appetite, the amount of money you're investing into the markets, the ultimate goal you'll be having with your investment in the markets, and the amount of time you'll be active with the markets. All of them are super important. So for instance, if you have a high risk appetite, you can be looking at more altcoins. If you're looking to invest more into the markets, so for instance, 90% of your total capital, the risk appetite should be going down. But if you're looking to spend all of your time into the markets and you're looking to live based from the investments, you're also going to have a more actively traded measurement when you go into them. So they are all very important variables. Also, making a goal for yourself, and it doesn't have to be, hey, from $1,000 I want to make 10K and then I quit. That's fine, but it can also be, I want to have a financial stable future because I want to be actively involved in all the decisions that I make, and I want to have a stable return of X% on a yearly basis. And for instance, if you take a goal of 10 to 20% on a yearly basis, you will be doing really great if you do that. So in that way, all of them are important to understand. But in this example, we will be working with a $1,000 portfolio, which is a large allocation to yourself. As an example, you're going to build through an altcoin portfolio entirely. And from there, you start to de-risk further down the cycle. So I wanted to make this video also because there are still many altcoins ready to start running. Some have done a great job. Most of them are still going to do it. And how should you be able to start? Well, first we need to discuss something that is called the cash position, which is important to know if you start a portfolio, that you need to be aware of the risks involved and that you need to be aware of remaining flexible. So I'm seeing a lot of people going into the markets, whether they are having a small portfolio or whether they have a portfolio and it goes up significantly, and they are not having the ability to add more cash towards the portfolio. If you don't have cash, it's removing the flexibility that you have of acting actively in the markets. Why? Well, let's assume that there is always a non-zero chance of the markets correcting or going down from the level you've bought. This means that you should be able to have some cash in your portfolio at all times to be able to take advantage of the moments that you're usually losing money. So by understanding that there is a non-zero chance of those corrections to happen, and when they do, usually you will be seeing a lot of fear in the markets because of it, but that is because everyone is entirely allocated to the markets. But there is no shame of having 70% allocated to the markets, and the markets are looking at a 30% correction, and that correction is going to be used to get back into the markets or increase to 85% allocation. So my advice would be to start with cash in your portfolio, or at least have a portion. But it depends on the structure of the markets, and at this point in time, I would suggest to not have it, but be building it at some point. I understand that if you have a small portfolio, and our example is $1,000 portfolio, it's a large portion of your total allocation, total capital. So you can start with not having cash, but you should be getting it once you reach certain goals, and we'll get to that. Another thing is, the further you get into the cycle, the more you should be taking out of crypto to ensure yourself that you're lowering the amount of risk that you're taking with your portfolio. The past few weeks, we've seen examples of the markets that have been correcting by a lot in a short period of time. This correction is an opportunity which you can be taking depending on the activeness of your entire behavior and the way that you want to attack the markets. So for instance, if you're looking at this chart for render, I would assume that if you go into social media, or what you have as a general thought is that the markets are going up as a bazooka, and it's very likely that it continues to do so, so you feel like you're missing the boat. Now when we look at the markets, we had this run here too. We had a heavy correction afterwards. We had another run, and we had another heavy correction. We had this massive run with minimal corrections in between, and a larger correction taking place here, which meant that we had a correction of 37%. Another big move up, another correction taking place of approximately 35% as well, I guess. 30%. And another push up. At this point, if you look at the markets and from the historical perspective, the people who have been buying here are happy here and are likely to start taking profits. Additionally, the amount of buyers are not interested at this point, or less interested, because those people have been buying here. Shortly from here, the amount of people that are interested into selling are going to increase, which means that buying into this asset is definitely possible, but I would suggest that somewhere in these regions, or if it goes to 20 and then corrects by 50%, those are the moments to get into the markets. But it also shows that having cash into your portfolio enables you to remain flexible and to use those spots of having a correction, because they will happen. Further, it's fine to start with a $1,000 altcoin portfolio with just everything in altcoins, but you should consider a few important points for yourself. And I would start with this. First of all, if the portfolio goes up by 2x, I'll start to have cash on the side to be active on the buying the dip. So that means if you reach $2,000, the first $200 to $300 that I make as an additional profit, that profit I keep in USDT to remain flexible. The higher the portfolio goes, the more you start to scale out, and that means the more you start building your normal long-term portfolio of Bitcoin and ETH, and not only altcoins. The final one, the further we get into the cycle, the less risk I'm going to be taking. So that is quite hand in hand with the previous one. But assume if the markets start to run and Bitcoin breaks the all-time high as a measurement and altcoins get to their all-time highs as well, you can still take a risk in altcoins after they have done the correction, but you need to take less risk. So for instance, at that point, if you start with a $1,000 portfolio, I would suggest doing it with $500 instead of $1,000. Keep the rest in Bitcoin and ETH, because your window of making money is shorter. So the window of being reflective and learning from your mistakes is also going to be shorter. Going back to the $1,000 portfolio part, a few important concepts to discuss, and we'll get to them. First, how do you decide to build a portfolio? Which segments of the markets? How do you allocate within the portfolio? How do you scale out of the portfolio? When do you stop getting into a portfolio position is also one. And before we continue with this, I'd like to discuss some important factors. The first essential factor is what we've previously discussed by the allocations in the markets. This is entirely hypothetical. If your portfolio is $1,000, but you're having a job that gives you $1,000 per month in income, then you're allocated in a relatively low manner. You're able to lose $1,000 and you would survive. Now, if you're investing into your altcoins entirely, the portfolio might go up to $5,000 or more. If the markets reverse from there and your positions drop by 50%, it would significantly impact your life, as you'd be losing almost 3 months of income. The higher you get, the riskier it will be, the lower your risk appetite should be compared to your monthly income stream. In that aspect, before we continue off deciding on how to allocate and dive into the project, let's first summarize this part. If you're starting to do this, a full allocation in the markets is fine. However, from a certain level, suggest $2,000, it will require you to de-risk your portfolio with at least a cash position. If your portfolio starts to grow significantly, you'll need to allocate towards Bitcoin to preserve your capital, to lower your risk, and even need to be taking out money towards other assets. Also, the further we get into the cycle, the lower your risk appetite should be. Right now, you'll be able to take a lot of risk, as we are still relatively early, but you need to be conservative on taking the actual altcoins. In the next chapter, I'll be discussing which segments you need to be aware of and which ones you can decide, or how you should be deciding it and allocating it towards the actual markets. Our mission is to provide you with a financially stable future through crypto. When I started, it was quite overwhelming to see all the info on social media, to see all the coins as well, and it was very hard to find the right information to get started with the markets or keep up with the latest news. That's why we've decided to create the Crypto One-on-One course. Once you start building your own portfolio, it's a must to know everything surrounding the cryptocurrency markets with Bitcoin, Ethereum, DeFi, and all those other things. A fundamental background gives you a lot of information to be able to investigate potential business opportunities. Alongside with that, it's a must to know how you should be balancing and building your portfolio, what technical analysis means, and how your portfolio can be secured. And I always say, if you invest into something, you need to know what you're investing in so you can explain it to someone else. In the Crypto 101 course, I'll be guiding you through an 8-hour course through all the fundamental first steps of understanding the markets, building portfolios, reading charts, and mindset. It's a course that I wish I had when I started, and it's designed to lower your beginning mistakes, to have a great start of your journey. And you can find everything in the description beneath, where you can find all the topics as well in the course. If you have any questions, don't hesitate, make sure to reach out to us on the contact form, and we are going to assist you as soon as possible. Now, the next part is how to decide which altcoins to buy. In this part, you will need to identify the amount of segments you are interested in. This is one of the things that I think that are the most important to understand, which is the landscape of crypto is going to be more complex. There are going to be more layers, there are going to be more things in the markets that are essential to know, which means that just as in with the regular markets, it makes sense to choose and pick which ones are the best for your fit. It also means that you need to be like a little bit of an ETF buyer when it comes to cryptocurrencies as well. But it feels a little bit boring, but it's a step to progress. It's a step to making money on a sustainable way. It's a step forward, which means that ultimately, if you want to have adrenaline, just go and drive your motorbike by 200 miles an hour. No, not 200 miles an hour, but 200 kilometers an hour. Or do some extreme sports, or just anything to trigger that adrenaline. But with finance, you never want to kick in that adrenaline. So you need to make it boring for yourself, so you are actually aware of it and you can plan other things. That's what you need to do. Now, for me personally, when I want to choose which segments I'm interested in, it is not going to be meme coins, it's not NFTs, it's not metaverse, and Just slightly gaming, but most things in gaming are currently with such a bad interface or graphics that it's just not interesting for me to look at all. What I find interesting is the potential extra layer it's going to provide for an ecosystem that is giving me the ability to stay in crypto, which means that what is needed to get to that ecosystem. How can I use crypto? How can I purchase a home through a mortgage? How can I get a loan? How can I just opt out of this system and use a different system? That is what I think is going to be very important. That's why I invest into or trade layer 1s, layer 2s, DeFi, DePIN, RWA, which is also super important. And if the ROI is going to be higher with meme coins, I'll be happy for the ones that have been investing into meme coins. I just stick with my game. I'm focusing on that. And at some point down the line, I'll be outperforming them anyway, because I'm actually able to rebalance the portfolio while most of the people in meme coins are chasing those big runs. So I'm just sticking to my personal preferences. But if you want to decide which ones are interesting for yourself, you need to start reading on those projects. So I've got the website of CoinGecko up here, which is a great start of identifying which segments are you going to invest in as an altcoin trader or as an altcoin investor, which means you need to select a few to make it easy for yourself. Usually if you have an altcoin portfolio, it's a basket of all sorts of things, but I'll be getting to it in a little bit. But narratives don't move at once. So AI is doing great now. We had a DeFi summer. We had an NFT period. We had a period with Metaverse also doing great. We had a period where Solana and Ejective are doing great. We are probably getting into an Ether and DeFi stage at this point. Probably we'll see RWA coming up as one of the biggest cases, and there will be more, but they don't go at the same time. They just go after another. So if you decide to have a portfolio which is all round, you are again doing the thing of having an asset, not selling it, it goes down, the other one goes up, you don't make money. So what do you want to do to make money is to make it easy for yourself, and that's how you do it, by taking 2 segments at max. 2. And you need to decide which ones. I've got 5 different categories, and depending on that, when I trade altcoins, I decide to take 2. So either DeFi, because Ether is going to wake up, or DePIN and layer 2s. And if I want to go more high beta, I take RWA. AI is also something I'm interested in, but I just missed that boat, so I'll be waiting until that hype cycle is over. Now, when you click on categories at CoinGecko, it shows you the data that you need to have, which is a long list of categories. I think there are more. Yeah, there are more. But actually, if you're looking at market caps, anything outside of like number 50, RWA is just at the 50th place. Modular is great as well. Then it's becoming less interesting at all. BRC20 tokens, that is a layer 2 that you can classify as a layer 2, and that's definitely one to focus on. Now you've got all these. Now it's up to you to decide which ones you want to have. Myself, I choose 2. And the question then is, if you decided to choose 2, is how many coins are you going to be trading? Well, I wanted to show you something, which is Chainlink, for instance, and I mentioned it before. Chainlink against Bitcoin has seen its peak in August 2020. Since August 2020, Bitcoin went up from 12k to 69,000 a year after. However, during that peak, Chainlink was already down 70% in their Bitcoin value, so you would have been better off by having Bitcoin rather than Chainlink. And that is also between altcoins. That's why not having 30 altcoins but having less altcoins is great, because if you're a starter, or if you don't have all the experience in the market that you need to have, Adding more coins is lowering your marginal revenue that you make out of these altcoins, which means that you're not able to analyze, not able to evaluate, not able to reflect. That is also meaning that the chance of leaving the markets are substantial, which means that lowering the amount of coins that you're looking at makes it easier, and including variables that are metrics to analyze, makes it easier for you to stay in the markets, and the game is to stay in. Although you're losing money, but during the period that you're losing money, you will be learning more, and because you're learning more, you will be gaining that back in the next cycle. So that's why you need to stay into the markets, and that's why if you build a portfolio, you need to make it easy for yourself. Now, if you have decided to take 2 segments, I think ultimately it comes down to a few important things. First of all, fundamental research, reading stuff, just reading it. Not what not what 90% of the people are saying on social media, but reading about the project and watching some deep dive project reviews, technical research in understanding BTC and USDT valuations, and then having clear rules and guidelines of deciding which allocations you would like to have. We have been going through a few. 2 segments. Amount of coins we discuss at next. Maximum amount of coins is going to be 8 to 10 maximum. Bitcoin pairs to look at. The further you get into the cycle, the lower the risk. If you reach a certain number, take out the profits. Those are all rules that you need to make sure of before you're getting into the markets. Now, if you decide on 2 segments, I would say maximum amount of coins per segment is basically 4 coins. Out of those 4, you take 2 big allocations, 2 small allocations. 2 big allocations to 2 top 5 coins and 2 small allocations into 2 coins outside of the top 5. That would mean 4 big allocations, 4 small allocations. That's how you get towards your portfolio. Now, the question is, how do you decide on getting into a portfolio? We'll get to that in a little bit, but this chart of Chainlink is showing you that markets aren't peaking at the same point. They do it in a rotation. That also means, if you're looking at the chart right now, is that if you have less coins and you watch the Bitcoin pair, that it's super important to understand that you're looking for coins that look like this, that are just on the ground, that are easy, that are fundamentally strong, just on the ground, need to reverse the Bitcoin value, and once they do, that's going to shoot off heavily. Now, if you're looking at coins that are having its run, this is not what you're looking at, despite if you're getting a correction. So render against Bitcoin is currently going up massively in the Bitcoin pair, which makes it less interesting to get into a position, similarly as Solana, as it is already up 4x from the low, which means that you are seeking for coins that are actually not having that run already. You want to have a prolonged correction and then get into the markets of the altcoin. So for Solana, the station has passed. Now, when we decide a few of those markets, and I would like to opt into the allocations that you need to do, you need to look for coins that are at the actual ground. So if you're suggesting for a portfolio, my suggestion would be the big allocations are going to be between 15 to 20% per allocation. The small allocations are going to be between 5 to 10%, which means that you're going to get to 100, of course. And if you want to keep like 1 to 3% into micro gems, you can do it. Those are sub 100 million, should be the micro caps. Now, let's look at a few examples of a portfolio. And I've got 2 examples. The first one is Deepin and Layer 2s. And they are in the list. You've got Layer 2s are, there you are, Layer 2 and Deepin. So if you decide on choosing this portfolio, render has been moving already based on the Bitcoin pair, alright? So you're looking at a case of coins that have not been moving that much yet. So you're choosing coins that haven't been running. So what would you choose? Well, things that have not been moving that much, which in this case, I would suggest 2 top 5 coins, Filecoin and Akash. as they are not the biggest runners of these 5 in terms of revenue, right? Then 2 coins outside of the top 5, which would be, in my case, Ocean and Golem, which are currently waking up. But you can also choose Ocean and Hollow, depending on or Ocean and IOTA, depending on your fundamental research. The allocations could be 15% into Filecoin, 15% into the Akash, 10% into IOTA or Ocean, 10% into Golem or IOTX. Alright? Now, another example would be meme coins or NFTs, right? That can also be a case. But first, we've just had the DPIN ones, and now we can also add the layer 2s. And in this case, you can also screen for coins that haven't been moving at all. Most of them haven't at all in the past week. So what you could choose is that you can say, I would like to have outside of Ethereum exposure and inside, which is Matic and Arbitrum. Those are two top 5 coins. Then another two coins could be Scale and, for instance, Cartesi or Loopring. Those are 2 other ones. Or you choose a new coin, which is Manta, which is currently at a market cap of 900 million. So then you've got 8 coins, which are, in this case, Matic, Arbitrum, Akash, Filecoin. And those are all equal to 15%. Then you've got 4 small allocations, which in this case could be Scale or Cartesi, and in the other ones Golem and Ocean. All 4 10% allocation per coin. Now, if you have different ones, you can do the exact same thing, which is Metaverse and NFTs. I just clicked on meme, but I would like to have Metaverse. Metaverse and NFTs. The same goes here. Render has been moving. Floki could be in there because it has been moving some. It usually does go up even more. But you also have a case of Sandbox, Axie Infinity, and Decentralize. Okay? So what you could choose is based on the data. I take, with the Metaverse coins, I would suggest taking Sandbox and Axie Infinity. Alright? As the two coins in the top 5. 2 coins outside of the top 5, you could suggest of taking Vulcan Forged, Magic, or even Engine Coin or Track. Alright? So then you choose 4 coins: Sandbox, Axie Infinity, Magic, and Vulcan Forged. What you could do if you take a higher beta risk is, in the top 5 coins, I take 20% as a large allocation and 5% in the small ones. Now, when it comes to NFTs, it's the same way. These 2 have been running massively. Theta has been running too. So you could decide to say, I want Internet Computer and Immutable X, and I want to have 2 coins out of here. So I've got Sandbox and Axie Infinity, but I want to have Decentraland and I want to have ApeCoin. So then you have got 8 coins again. Internet Computer, Immutable X, Axie Infinity, and Sandbox, 20% each. And then 4 small coins, which are ApeCoin and Decentraland. And then you've got Peer and Magic, which is 5% each. 2 example portfolios as a Kickstarter, 2 segments, 4 coins per segment, 2 large ones, 2 small ones. That's the start. The next question is, how can you trade through a bull cycle? We have discussed setting up a portfolio, but you need to be aware that if you start a portfolio without having any cash, that you can do that right now because the valuations are still super low. But you need to be aware of the fact that at some point in time you need to be starting to scale out, which means that if the portfolio starts to grow from $1,000 towards $2,000, you need to be building your cash portfolio. The second step, which I'm coming back to all the time, is to be aware of the fact that you need to rebalance your portfolio. Rebalancing essentially means that you will need to make sure that your positions are allocated wisely. I'll provide some examples for this. My suggestion would be to rebalance your portfolio given the altcoin markets on a weekly basis. On a weekly basis essentially means that if you're doing it such an active manner, the altcoins can move by 50 to 100% on a week and downwards by 20 to 30%. So if you take a month or 3 months with just an altcoin portfolio, it is going to induce a lot of risk for yourself. So I would suggest of not doing that. I would suggest of being relatively active, doing a weekly rebalance. Example of this is that let's assume you've got an altcoin portfolio of $1,000 with 5 coins in there or 4 coins in there. 4 coins, $250 each. One of the coins decides to pull a 5x. So it goes from $250 to $1,250 and the other 3 stay at $250, which means that your portfolio has been going up from $1,000 to $2,000. The $1,250 that you have in that altcoin is all of a sudden 60% of your portfolio, which means that if the markets decide to have a correction or that specific altcoin decides to drop, it's going to have a huge impact on your portfolio, which means that you need to start rebalancing your portfolio based on that. And if you decide at a weekly basis, I want to keep these altcoins, or monthly basis, or 2 weekly basis, I want to keep this altcoin, it means that based on the fact that it went to $2,000, you need to rebalance towards those 4 coins and having 25% into each of them. That means that by the percentages that I've been sharing when it comes to the altcoins, that if you have 4 coins of 15% and 4 coins of 10% each, that on a weekly basis you need to shuffle them back in to keep on compounding your actual returns and to lower your risk of a potential big volatile move on your portfolio. There are 2 strategies that you need to be aware of. The first one is making sure that you're taking profits from the altcoins once they reach a certain threshold. So for instance, if you're buying Chainlink, let's just use that example. You're buying Chainlink at this point in time, it is currently $20, all right? Then at some point, if it reaches 35, 40 and 50, on all of those points, you might want to decide, I want to just start selling some. So I sell 10% here, I sell 10% there, and 10% there. The higher it gets, the more you start taking out, because it's getting more volatile, more vertical. So you start de-risking already. Those profits can be taken back into the other altcoins if they are lagging behind. And then you can rebalance the portfolio based on that. That's the overall perspective, in which if you decide today, I'm going to build this portfolio, I'm going to keep track of it and I do a weekly rebalance, but in between, if the altcoin makes this move at these thresholds, I start to take profits, then you can still decide to keep that in USDT or move that towards the other altcoins and then do the weekly or quarterly or weekly or bi-weekly rebalance additionally. So there are 2 strategies that you could be using. The good part of this is that you are erasing emotions, and if you're taking those profits this way, you can also start reallocating when it goes back down, and I'll be discussing that in other videos. But it lowers the amount of gambling and it lowers the amount of risk that you're taking in the portfolio. Now, the next thing to understand is that you need to be aware of the focus on the Bitcoin pairs. So the Bitcoin pairs are lagging behind massively, which means that at this point in time, Chainlink against Bitcoin is still at a cycle low. I'm saying this because the valuations of altcoins are going to levels we would never expect to see at all times. But those levels are also going to produce a correction of 80%, or they are going to go higher. Let's assume reality with Fetch. Fetch is at $3. It's I think 2.5 to 3x of its previous all-time high. Chainlink can easily do it as well. Other altcoins can easily do it. So that means that you need to look at Bitcoin values to see where they are. And if the Bitcoin value is at a low, it is a great time to step in, because ultimately with an altcoin portfolio, you want to outperform Bitcoin and you want to be into a portfolio that actually generates a return in Bitcoin. That also means that if the portfolio goes up, you need to start allocating more towards Bitcoin and ETH, which I previously discussed. Now, if you look at the altcoin pair of Fetch, I don't need to explain myself, but this is one that has passed the station and is definitely not one to get into at this point. The fourth thing is the one that you need to consider, that if you want to get into a position that is already running, right, you need to be aware that you're doing it in a correction of 30 to 60%. So if Fetch has been doing this, and this is the most beautiful example, first run had its correction of 65%, so you would have been slightly underwater, and then it started to continue going up by 350%. Here we're seeing this run, it went down a lot, 73% even, and in between this run it's having corrections of 35 to 40%, and it goes up by 270%. I think it's close to a peak, but who knows. To me, if I want to get a position into FED, I want to see it start dropping from 30% to here, all the way down towards 60%, which is a retest here. This region is where I would start allocating more and more and more and more. All right, the lower it gets, the more you start allocating at this point in the cycle. But you've got time. This one is going to take time before it goes down. It probably will take some weeks or maybe even months. So this one has passed the station. But if you're looking at other coins, if it works, you can see that we're barely starting up. Matic against Bitcoin, still making cycle lows. AVAX against Bitcoin has been seeing its run, coming all the way back down. All those coins. Atom against Bitcoin, cycle lows. It didn't even start yet. All right. So rebalancing is super important. Reading Bitcoin pairs is super important. When it starts to trend, being aware that you don't chase the candles, and also making sure to start getting into cash when you go further into the cycle. The final part. And I'm going to discuss this in a short manner because I think I've been sharing everything you need to know about building your own $1,000 altcoin portfolio. You've got many key tools. You know the amount of segments, when to start balancing towards cash, how to read altcoins. That is what we're going to focus on in videos as well. You're aware of the fact the amount of coins that you have in big and small allocations. All those things have been discussed. And it's different than the regular video that you're watching, but it helps, I hope, at least. For me, it helps because I've got general rules that I'm going to work with, etc. Now, how do you scale out? First of all, I've been saying that if you reach a certain level of portfolio, you need to start allocating towards cash, because within that altcoin portfolio, if you go from 1,000 to 2,000, from that point, you want to be able to be flexible that if the market's correct by 30%, you use the money to get into the actual position. Then you've got the altcoin portfolio, but actually you want the altcoin portfolio to be smaller than your total portfolio. So from a certain level, having solely altcoins is super risky. So you want to build something else than altcoins, to be aware of having less risk because your portfolio started to grow. So after a certain level, you want to start de-risking towards Bitcoin and ETH. And also, as I've been mentioning, the further you get into the cycle, the higher the valuations of the altcoins, the more you should cash out, the lower your risk appetite should be. And right now, your risk appetite can still be very high. The further you get into the cycle, the shorter your time horizon should be as well. I've got 3 examples that I'm going to finish off this video with. The first one is, if your portfolio has been going from $1,000 to $5,000, what are you going to decide? Well, from that standpoint, you're going to decide to start building your Bitcoin and ETH stack. So you initially decided, I want to have 100% into altcoins at the start. From $2,000, I'm going to build my positions into cash. So at least 10% I want to have in cash. The further we get, the more I want to have. So if you get higher and higher, the more I want to have. That means that if you get to $5,000, you might want to have 20% in cash to be able to buy the dip. But once you reach $5,000, you want to keep 20% into cash, but you also want to start taking the profits out of the altcoin portfolio, being able to get into Bitcoin and ETH and to start building that portfolio, making sure that you're not going to lose it all. All right? So that is what I would suggest you to do as well. And it can be different. You can decide different numbers. You can decide different picks. That's completely fine. But these metrics are something you need to write down, put behind your computer, and just wait it out. That's just it. The second one is the portfolio goes up and you scale towards USDT and Bitcoin and ETH. So assume your altcoin portfolio is $5,000. Of that is 1K into cash. You've got $5,000 in Bitcoin and ETH as well, which means half-half. The altcoins start to correct. What do? Well, let's assume that that is taking place, and from the $5,000 in altcoins, the $1,000 remain there, but the 4K is dropping down to 2, and the Bitcoin and ETH remains the same. There will be an option where you say, I have got $3,000 left, 1K of that is cash. I use half of it to buy back into altcoins, but I'm also going to use portions of my Bitcoin and ETH because the altcoins have been dropping by 30 to 60%. That is the right moment to take more risk. I'm swapping a portion of my Bitcoin and ETH back to the altcoin portfolio. I've got my structure again, and from there I'm going to play the game just like we have been discussing in this video, making sure that you're taking the actual abilities to perform well in the cycle. Your portfolio further in the cycle is less and less altcoins, more and more Bitcoin and ETH, and at some point more and more in cash. And that feels awkward, but we're going to discuss that in the videos in the upcoming years. But this was actually everything I wanted to know, and you should know when you start building your portfolio. I hope you have been enjoying this video and has been providing content for you, or has been providing value for you on your journey towards a financial stable future and freedom. If you did enjoy the video, can I ask you a favor and comment beneath on what you think about the video, what you did like, what you didn't like, what you'd like to see. All your feedback is very helpful by building and continuing the level of content which we aim to provide. Thank you, and I'll see you again on a new video next week.